So hello guys, in today's video I'll be diving into something that I've never covered in this channel, and it's actually a very crucial part to know if you are a true SMC trader. And so without further ado, then let's get right into the video. Okay, so right here, this is British pound on the 15-minute time frame, as you can clearly see. Okay, so don't mind the boxes. This is actually my indicator, the trading session, that it showcases the Asia range and as well as the key window. Okay, so right here we can clearly see, if I am to mark the market structure pretty much fast here, we can clearly see that price has taken out the inducement. Okay, so price has taken out the inducement, and we can also clearly see additional sell side liquidity here. And after taking out all the sell side liquidity, we can clearly see price reverses and breaks past this high, of which it was actually, or breaks past the swing point prior to that retracement that takes out that sell side liquidity. So what does this mean? This means that this one here is a bullish break of structure. Okay, so we can actually mark the swing points for clarity. Okay, so you can clearly see this is the swing point low, as it is the lowest point price achieved during that retracement. Okay, so we know after the break of structure, the next step that we usually do is marking the inducement. And in this case, we can clearly see that this one here is actually the inducement. And in this case, it's actually a major inducement. Why major? Because it occurred after the break of structure. Okay, so there we have it, our major inducement. I'll just use that sign. Okay, so the thing that I wanted to teach you guys is this thing about this smart money trap, because we know that we don't buy or sell without the inducement takeout. So this is of course an SMT in that case. Okay, so there we have it, a smart money trap, or in other case SMT. So there's something about the SMT that I wanted to cover into today's video. This is 15 minutes, as you can clearly see right there, the 15-minute time frame. So the lower time frame of the 15 minutes is of course the 1 minute or the 2 minutes. So I'll dive into the 1 minute so that I can explain this better. Okay, so right here we are on the 1 minute time frame, and we can clearly see the SMT where it is. And of course, when we get to the 1 minute now, the whole picture is actually different. So we can clearly see this is the inducement on the 15 minute, and on the 1 minute we can clearly see this structure. So right here we can clearly see the inducement takeout. So price has taken out the inducement. Okay, so right here, of course, I'll use that to symbolize an inducement. Okay, then after that, we can clearly see that price made a break of structure. As you can clearly see, upon price taking out the inducement and of course additional sell side liquidity below here, it made a reversal all the way breaking past the swing point low prior to that retracement. And of course, you all know this pattern. This will make the break of structure. Okay, so we can clearly see that's a break of structure on the 1 minute. And if I am to mark, of course, the inducement on the 1 minute as well, we can clearly see that this is the major inducement. So exactly right there, we have it, our major inducement. And of course, we have our high at this place. So that's our high. And of course, this here, this low will be, of course, now the 1 minute external low, of which it is actually the inducement on the 15 minute. So meaning that if price now breaks past this low, this will be a change of character on the 1 minute. Okay, so what does this mean? We can clearly see that the SMT on the 15 minute is actually this one here. So back to the 15 minute, we can clearly see that this one here is the SMT, the POI right before the inducement. Of course, we know this is what we call the smart money trap. So you can clearly see this is a smart money trap on the 15 minute. But if I get back to the 1 minute, of which it is actually the lower time frame of the 15 minute, now things here become different. Okay, so you can clearly see where the SMT is. It's actually the order flow, the valid order flow on the 1 minute. So exactly right here, this says the valid order flow on the 1 minute. So there we can clearly see the valid order flow. So let me get rid of this SMT. You can clearly see it's actually that order flow. The reason is why I picked that order flow is because the one that it was on the extreme, it is actually mitigated, and you can clearly see right here. And if it's mitigated, then in that case is of course an invalid order flow. Mitigated because we can clearly see this. Okay, so there was the mitigation. So if it's mitigated, of course, in that case, it's invalid. You can clearly see this order flow is not mitigated, so it's actually valid. And the one that actually caused the break of structure is none other than this one. So what does this mean? This order flow is what we call the decisional order flow. So pretty simple. You can clearly see right there we have our decisional valid order flow, and of course the sell side liquidity right before our extreme order flow is what we call the engineering liquidity. Of course it will be ENGLQD, so exactly right there. And so if I am to mark the order blocks, of course now it will be easy. So we can clearly see we have our decisional order block exactly right there. So there we have our decisional bullish order block, and of course the extreme order block will be none other than this one. This will make, of course, our extreme bullish order block. So let me make this to the bottom. And of course, right here, we can clearly see, okay, let me get rid of this. And we can clearly see the origin order block. I mean, that farthest unmitigated order block on that order flow, that it is on the origin, but it's mitigated. So this means that it will only be valid. I mean, this origin order block will only be valid if this extreme order block, as well as the extreme order flow, as well as with its associated extreme order block fail. Okay, so now we have all of this, and we can clearly see a beautiful structure. If I am actually to do this, so you can clearly see that price has done that. Again, you can clearly see this scenario, and of course you can clearly see that this is a break of structure. So you can clearly see that the 1 minute trader has this structure, and as well the 15-minute trader has marked this point, I mean this one here, to be the SMT on the M15. So meaning what? He doesn't buy from this area, but this 1 minute trader, you can clearly see that this 1 minute trader, that's actually the extreme order flow of his case. So what does this mean? He's looking forward to buy anywhere there. He can even go to the point where he uses the fib, drag it from that low all the way to that high, so that you get to see what POIs are actually the discount of the dealing range. And we can clearly see the order flow is in the discount of the dealing range, as well as the extreme order block and the extreme OB. So in that case, he'll be waiting for those order blocks to be okay. So you can clearly see if I continue running price here, price is doing all of that, and of course you can clearly see heading lower, came to our decisional order block, gave a little bit of reaction here, and you can clearly see it's kind of like it will fail that. Yeah, you can clearly see price failed that decisional order block, took out the engineering liquidity, and of course right here you can clearly see it's giving that reversal from that extreme order flow, of which it was actually in the discount of the dealing range. And of course if I continue running price, you can clearly see that price is making that, you can clearly see exactly right there, this is what we call a two leg. So what I mean is something like this. You can clearly see price doing that high, again that, and of course you can clearly see there's a two leg exactly right there. So the entry of course is supposed to be after the second leg, stop loss of course below the leg, below the first leg, and of course we'll be targeting this high, and that will give you a 1:2, of course a favorable risk to reward. And of course if I continue running price here, you can clearly see that price is heading onto our favor. And of course, you can clearly see this was another entry after price has, you can clearly see right there. So that would be the other entry, of course, on the third leg. Stop loss, of course, now I can place it. We can just place it where the first was. And if I do this, okay, so this will not give me a good risk to reward. So we'll have to be somehow aggressive with the stop loss. And of course if I continue running price here, we can clearly see price triggered that, and of course it continued higher and higher as well. I don't know if price made it to this area. Yeah, you can clearly see there that would have been another entry all the way to that high. And you can clearly see if I continue running price, price ended up reaching towards the external liquidity. So you can clearly see exactly right here, the SMT on the 15-minute actually worked. So guys, you can clearly see that this here is actually this was the inducement on the 15-minute, meaning the POI that price made this reversal with these two beautiful trades exactly right here. This is actually an SMT on the 15-minute, and we don't use the SMT to buy or sell, but you can clearly see on the 1-minute this is actually a clear. So you can clearly see that this is actually a complete structure. Everything is aligning. When I get back to the 15-minute, right here, we can clearly see that now our inducement. Okay, so let me get rid of this structure first so that you guys can literally see what I'm talking about. So this here was our inducement initially. So this one here was our inducement initially, exactly right here. And you can clearly see price respected the SMT, of course, exactly right here. And we said that the SMT is not a valid POI to actually take the trade from. But if we get to the lower time frame, we saw that this was actually a valid order flow. Now, what you usually do after price creates another valid pullback, then we move that inducement to the recently formed valid pullback, because now that is the most reference for the inducement liquidity, the recently formed valid pullback. So the sell side liquidity below, the sell side liquidity resting below that low is what we call the inducement liquidity, in this case major inducement. So you can clearly see now this one here is no longer the SMT, and now the SMT becomes this one, of which if we get to the lower time frame, that is the 1-minute, again we'll find that that is of course a valid POI. So let's get back to the 1-minute. So you can clearly see exactly right here on the 1-minute time frame. So our previous break of structure was exactly right here. So this here was our previous break of structure. That is after we reacted from this order flow that was on the discount of the dealing range. So a very nice POI, of which we took those two valid entries. So that was actually the valid POI. Okay, so that was the valid POI. This here is actually the break of structure. Of course, should be the one on the 1-minute. And after that, of course, you can clearly see price created another valid break of structure exactly right there. So right here, we can clearly see that's a break of structure. And now this here is actually the inducement, of course, on the 15-minute. Now we can clearly see exactly right here on this new range that this here is actually a valid, so we can clearly see exactly right there, this is actually the extreme order block exactly right there on the 1-minute. That's of course a nice extreme order block, extreme bullish order block on the 1-minute. And of course this is also now the SMT on the 15-minute. So what does this mean? The SMT on the 15-minute becomes the valid POI on the lower time frame, and one can actually buy, but this is actually a risky buy because we don't know when price will actually fail. We don't know when price will actually fail that 1-minute structure and make a change of character, of which now it will be the inducement on the, of which now it will be an inducement takeout on the 15-minute, because literally price can continue. Actually, if I continue running price here, so let's get to see. Okay, so price creates an inducement, continues higher, and you can clearly see, okay, so price is continuing higher and higher. So you can clearly see this is actually this is actually the 1-minute, and you can clearly see the inducement was here initially. Then after price respected this range, of course, we keep on moving the inducement and moving the inducement until when the inducement is being taken out. So what does this mean? Price will continue respecting the lower time frame until it takes out some sufficient buy side liquidity on the left or mitigates a valid POI, in that case, to give sufficient momentum for price to actually make that break, of which now it will be the inducement on the higher time frame. Same in this case, we can clearly see exactly right here that this one here is of course the inducement on the 15-minute, but it will be actually the change of character on the 1-minute. So like in this case, if I continue running price, we can clearly see exactly right here. Okay, so price continues higher. So what does this mean? Price is uh, keeping on respecting the lower time frame. So you can clearly see now we shift the inducement to this part exactly right here. And if I continue running price, of course, exactly right here, now we can clearly see that price has collected enough sufficient liquidity on the left that head, causing this now, you can clearly see, causing a change of character on the lower time frame, of which now on this time frame it is of course the inducement. And now in this case we can actually now take the buy from now the higher time frame, but we actually can't know when price will literally take this inducement. Price can continue heading higher, and of course we'll keeping on shifting this inducement as price creates a new valid pullback until price takes out sufficient buy side liquidity that will cause that momentum lower to take out the inducement, and of course come all the way to this area, whereby now we'll be taking the entry from these valid zones. And if of course this fails, of course the same now price is looking forward for the higher time frame above the current one. And of course you can clearly see, if I continue running price here, exactly right here, okay, so you can clearly see price is heading higher and higher and higher and higher. Okay, so this is what I actually wanted to teach you guys. Exactly right here, you can clearly see price eventually made a break of structure exactly right here. So what does this mean again? The 15-minute inducement shifts to this newly formed, you can clearly see this is what we call now, so this now will be the new inducement that price has created. So not until this is taken out, of which now it will be a change of character on this time frame, then we will keeping on shifting this inducement as price is heading higher until the 1 minute structure fails. Then now we'll be looking forward for the 15-minute structure. So this higher time frame SMT is actually a higher time frame PY, and this is something that I have proved with you guys here. So you can clearly see that was the higher time frame SMT, and probably also this here will be the higher time frame SMT. So somewhere here this will be the 15-minute SMT as well. So this here will be the 15-minute SMT, and of course this one here was also the 15-minute, this one here was also the 15-minute SMT. So you can clearly see the 15-minute SMT is actually a valid POI on the lower time frame, and price will keeping on respecting the lower time frame until it takes out enough liquidity to cause a change of character. Like in this case, you can clearly see this was caused the inducement, but on the lower time frame, that is probably the seconds time frame, because this is the 1 minute. Of course, in that case, it will be a change of character, and now price is looking forward to respect the 1 minute. If the 1 minute fails, then price is looking forward for the 15 minute. So you keep on playing with these time frames like this. Yeah, and you can clearly see that this is the inducement, and of course this we started shifting this exactly from here, actually from here, of course continuing shifting until we are currently here, because we'll be shifting this inducement to the recently formed. And of course if price actually creates another valid pullback here, we'll continue shifting that inducement of course to the newly created valid pullback low until price actually makes a change of character on the lower time frame. That is after it has taken out some buy side liquidity on the left, sufficient buy side liquidity to actually cause a change of character on the lower time frame. Then now in that case, of course, that will be an inducement takeout on the higher time frame, and of course now we'll be looking forward for now the 15 minutes, and of course we continue buying all the way to that high. So that is what I actually wanted to showcase in this video, and it's actually a very crucial part for each and every True SMC trader to know. And if you're a complete beginner on True SMC, you can check out my playlist, True SMC from A to Z. The video course playlist 2026 edition is actually 10 lessons, and you can actually have an extra resource as well, of which it is the ebook in the description of this video. Anyway guys, if you've learned something, drop a like, and of course I'll see you in the next video. Peace.